There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to the Trading Justice podcast. And we got a special guest, but like I've always said, they are always special to us, special, near and dear to our heart. But before we get going, let's just talk about the podcast really quickly. If you are enjoying the podcast, get out there to iTunes. Help us spread the good word of trading, investing, the Trading Justice podcast, tackle trading, and everything else we're doing over there by giving us a nice little 5-star ranking and a great review. If you don't like us, just don't listen to us in the first place. Mike Curtis is our special guest here. Mike, how are you doing today?
I'm doing great. How are you guys?
Fantastic. And before we get going on with Mike, let me bring on Tim here. And Tim, it seems like the last few podcasts you've been doing some live mentoring. Are you doing it again today? Still, right?
I am. I got Dina Dean. Got Dina Dean in the office. Dina, give him a drop.
What's up, everybody?
Hey,
Dina and I have been jamming out to tunes, and I understand she's a huge Missy Elliott fan. She loved the Super Bowl halftime show.
Did she? I could. You know what? Knowing Dina a little bit, that is not surprising in any capacity. Not at all is that surprising. Missy Elliott was there's like literally any if you have children and you're watching, Katy Perry, and then all of a sudden Missy Elliott comes on and everybody's like, who the hell is that? Because your kid's 17 and under. They don't know who Missy Elliott is. They don't know her journey, but Dina sure did. So I get down with it, Dina. Well, thanks for listening in here, Dina, and we'll kind of get going here. Now, Mike, let me kind of just I'm going to do a little quick intro for you. Okay. Me and Mike have known each other for many, many, many years. In fact, we were babies in this industry growing up together, correct?
That's right, yeah.
Back in 05, 06. Learning how to trade, doing some crazy things and whatnot. And basically, me and Mike, as we were coming through this together, we really worked on a lot of projects together, built trading systems together, softwares together, and whatnot. So it's such a pleasure to have you on the podcast, Mike, so we can kind of reminisce, Al Bundy style, obviously.
That's
and,
right.
Think about the good times, tell some stories and whatnot. But before we get into that, let's talk briefly about the market and what's your take on the market. I got a couple, because I've been getting a lot of questions recently, and I want to get your take on a couple of them. Number one, let's talk about the stock market specifically, the equities market. You've been a trader now for 10 years, maybe a little bit more than 10 years, correct?
Matt. Did you cut a rail before we started this? Mike, Mike, do you realize, that player in football that's the little guy that is only on special teams and his only job is to just go 100 miles an hour and just bust up a wedge?
Are you calling me a practice player?
No, I feel like I'm the wedge buster lately. I only have one job. It's just to slow you down. Holy cow, I couldn't get a word in.
Listen, no, I did not line up a rail, Tim. This is not 1984, all right? Second thing, there's better ways to do it. Next, okay, I've been stuck in 2015 tax hell today. Hell. I bought a new house. I wasn't planning on doing my taxes for another couple months, at least into March 1st. So I still thought I had myself 3-4 weeks to prepare this stuff. And me and my wife decided to buy a home. By the way, Mikey, we're moving back up to God's country up there in Harriman, Utah. So,
oh, nice.
We'll be
right
up there.
It's
about 6 weeks from now. So we put this offer in on the home. We got it accepted, and I have not filed my taxes yet. And they're like, "Well, we need your 2014 tax." I'm like, "Are you kidding me? Seriously? You're just now telling me this?" They gave me the letter of approval like 5 minutes after talking to them, and now they're saying, "Yeah, we just need your 2014." I'm like, "You don't understand what that means." First of all, I have multiple businesses. I'm a trader. I'm just like, oh my God. So I leave tomorrow. Okay, I found this out late last last night. I leave tomorrow to San Francisco. I'm gone. I'm traveling all day tomorrow. I teach an event in San Francisco Thursday, Friday, Saturday. I get back in the office on Sunday, teach Master Trader when I get back into the office on Sunday. And then the next week, I'm doing it again. So I literally have today to do my taxes. And so my tax guys, Anderson Law down in Las Vegas, they send me the link to fill out all this form. And I swear to God, guys, the form they asked me to fill out is about 70 pages long.
Lawyers, man, that's what they do.
Well, and I'm just like, listen, I've just had my old man do this for forever. And so I emailed
right, Mike,
the lady.
which means you show up to the old man's office and then you just figure it out. So like just having to like
30 minutes
paperwork on his desk.
Yep. You just hand him everything. He looks at you and with some disgust, mind you. But then he's just like, okay, this is okay. Let's get this done. 30, 45 minutes later, you have no clue what happened. You pay the bill and you go home. Yeah. But now I'm dealing with this professional company out of Vegas, and I love them. They're awesome. But at the same time, I'm filling this out, and I emailed the lady that's over my account down there. Name's a sweet lady by the name of Tracy, and I said, Tracy, I don't know what to do. Okay, and I'm sure she's thinking, you are a successful trader, investor, business person, and you're stumped at a tax form. And I'm just like, and I told her, I was like, I've never done one of these.
Well, it's the 70-step checklist. I bet if it was under 50, your brain could process it. But once you get
I'm done. 50, I'm good to go. 50, I'm good to go. But I don't know what some of these things even mean.
Oh,
seriously, even
you're that client, huh?
I'm just, oh wow. Yeah. Oh, I'm a terrible client. Are you kidding? They're going to absolutely hate me. And they gave me a discount to join them, which means they're going to regret giving me a discount too. They're probably going to come back and charge me the full fee. I hope they don't listen to this podcast. We had Clint Coons on our podcast yesterday. Hopefully they don't listen to this one. Anyway, so Tim, no, I did not do a line, okay? That's offensive to a lot of people in the 80s who did lines for the real way. I did not.
Well,
but thank
Mike,
you,
do you see what I have to deal with on a regular basis?
Man, I spent so many countless hours in Matt's office trying to get things done, and just the rambling stories that are very entertaining, I gotta say. But the productivity kind of swerves in and out of, very productive to
I knew I would enjoy this.
Hold on. Wait, hold on. First of all, you can't just do content, Mike. You have to also have the proper mindset. And some people learn better through stories, okay? Right. So, and those stories back in the day, don't tell me they weren't funny.
Give you that much.
Okay, and as an employee back in the day, isn't it our God-given right as an employee to waste time sometimes?
Yeah, you guys did plenty of that.
Exactly. And lastly, didn't we also create wonderful trading systems and software and turn this industry on its head
absolutely.
back in 07, 08,
part of that from the golf course as well. So that's the fun thing about it.
Yeah, I miss playing golf with you.
Yes, I guarantee we did.
Why have we not played golf lately? Yeah, let's get out there in the spring.
How is your handicap?
It's been better, but it's not bad. I think last year I was playing to about a 6 or 7. So
we're not golfing. Not gonna happen. No, little Mike Curtis is not gonna go out there and just school me golfing. Just kidding. I don't care. We're definitely going golfing.
There you go.
Oh, anyways, before Tim rudely interrupted us, I was in the process of asking you, how's the kids? How's the wife?
They're awesome. So the fifth and final Munchkin is about 1.5 years now. The oldest is turning 12 in a few months. So we've got the 2 girls, the 2 boys, and then the baby broke the tie with the fifth and final, and it was a 3rd girl. So we got our hands full.
Oh wow. How in the world are you going to survive this?
I've got a good soundproof double door on the office, and when it's shut, the kids know to stay away, and the wife knows to stay away. So whether I'm trading or messing around, I come to the man cave in the office and just kind of shut it down. So.
Okay, you want a piece of advice from me? Since I have a 17-year-old, and you're going to be approaching that teenage years. Oh yeah, I know, it's crazy. We're getting old, Mike. Anyways, I got these new headphones. Okay, and they are Beats Studio Bluetooth, and they will shut down the world for you. Okay, if your wife is yelling at you, if your kids are whining, You just put them on. They know you're not to be trifled with. You can't hear a thing. You put on some music, subtle, and all of a sudden you're in your happy place.
Okay, I'm going to order them as soon as we're done here.
I'll give some advice to both of you, actually. Working at home is fine sometimes. I would get an office, boys. Get out of that house sometimes. Go interact with the world.
You worked from home for 10 years. And now because you've been doing this for 2 months, all of a sudden you're the expert on getting – I don't get this.
We'll just come hang out at your office, Tim. We'll just throw up a few more
desks. I like that you want to take a shot. You can come hang out at my office anytime. Me and Dean are having fun. Who's having more fun than us?
I need a little Missy Elliott to help my trading, I think.
We always have.
Oh, we might have. If I still had the mixer connected, I would actually play Missy Elliott right now, old school Missy Elliott. Set the mood right, get all pumped up. All right, let's get back at it here. Mike, let's talk a couple different things. First and foremost, the market. People are a little concerned right now. You can feel it out there in the air.
Sure.
You've been around the market reversals, the bear. You understand the volatility. What is going on in the market, and where does it head from here?
So, good question. I mean, obviously, these last 2.5, 3 months are it's unlike anything I've ever seen in my 12 years of doing this. Obviously, we'll see markets that consolidate and go sideways, but this is to see the consolidation, but the volatile swings back and forth. I mean, the NASDAQ composite swinging 200 points kind of from week to week, back and forth. So it's definitely interesting. I mean, right now I'm just waiting to see if it kind of breaks out of what I like to call no man's land and see if it tries to pick a direction here. So, go ahead.
Real quick, looking at the last 2.5 months, kind of what you were talking about, just up and down, just a quick movement up, then a quick movement down. It's not slow. It's very, very quick. You're talking pivoting support resistance 3-4 days. Very difficult trading environment. How do you personally adapt your trading to this type of environment, in comparison to, say, a nice solid bullish uptrend or a nice solid bearish downtrend?
Yeah, so I start just getting a little more defensive when I don't have the confidence behind the trend or what I think the market might be doing or where it might be heading. So to me, I just pare things back a little bit and I know that it's not going to last forever. And to me, a focus of mine has always been in trading that maybe it's because I started trading when I was so young, but I never felt like there's some strict deadline of, I've got to make this much money this month, or I've got to make this much this week. And so having that a little more laid back mindset, it lets me peel back just a little bit, not be so uptight about making X amount this week or this month. And so for me, I pare back just a little bit. And then I just, if I'm selling, doing an option strategy where I'm selling premium, I might just give the trade a little bit, more wiggle room. I don't hug it right up as close. I give it a little more room to wiggle around and bring in a little less income for it. But, I'm okay with that. I'd rather just sleep easy at night and not have to stress about the market swinging against me drastically.
So you pare back your position size. You maybe not make as many trades, and the trades that you do make, you give a little bit more room so you don't get just kicked out based on random whipsaw volatility impacts, right?
Exactly, yeah.
Awesome. Tim, come on in here, buddy.
I'll tell you, as I'm listening to Mike, I am very interested in his take on the market. There's no doubt about it. But I also, at some point, I want to talk to him about his take on teaching students and teaching beginners and being a mentor and making his transition. The thing about the market right now, Mike, obviously oil is in the news. And what advice do you give your new traders when they're dealing with a volatile commodity that's so sensitive to so many different factors? Like, do you tell them just focus on the trend? Do you tell them to avoid it? Like, how do you approach that particular subject?
Yeah, so good question. I mean, we always want to focus in on, what information we have, obviously. So what's the trend doing? How's this reacting? And then also, just kind of along those same lines, like I was just discussing, I just say, hey, proceed with caution. The warning flag's out right now when something's got a lot of news, a lot of volatility around it. Don't go big, have your normal position size that's established, and then have your safe position size that's established, and come in and, trade along the lines of that more conservative position size. So if things go wonky and, you get caught on the wrong side of a move, it's not going to really cripple you or make you gun shy from jumping into the next trade. You can look at it and say, well, gee, I took that smaller position. Glad I did it, and then I can move on to the next opportunity.
Yeah, I really like that take on it. And, Matt, I've been trading oil like crazy. 5% down today, was it? At one point, it's nuts. What's going on with that market today, Matt? What was in the news?
I don't even care what's in the news. Oil's going down. All we've seen recently is just a little bit of uptick. What the news cycle, it's crazy, it's random, but China basically said they're going to stop buying as much oil because of the less demand. That's what they said last night. Futures were down 5%. Here's what drives me crazy about the news. If China said the exact same thing, but oil was at a very low, it probably would have not have impacted it the way it did today. But because oil was, up around $53 a barrel, you had a bigger impact because it's at resistance than it would have been at support. So, to me, I'm bearish on oil. I'm going to be bearish on oil for the next foreseeable future. Tim, you know my take, and Mike, you can agree or disagree with this. I see oil in the 30s. I see it in the 35, 38 range. And until it gets there, I'm going to continue to be bearish, or until the trend changes. And the trend does not change until support holds.
Yeah, I'd 100% agree with that.
Although, let me. Hold on. I want both your takes on my trade on oil right now. Okay, I have two specific trades on oil. Okay. I have put options on crude, and I sold naked puts at 15 on USO. What do you think?
Naked puts at 15 on USO?
On USO.
What's your plan? Are you going to take delivery of that ETF and then do calls on it or something?
I'm going to take delivery at 15. But then I'm going to do it at 12 if it continues to go down. And I'm going to continue to buy puts on crude as it goes down.
With either position. Conceptually, I have no problem with either position. But what I would say is, are you bearish or bullish? It seems like we're fighting both sides of the trend there. I think crude oil is a dumpster fire, and it's not going to stop burning until that thing goes down quite a bit. So I'd be cautious about selling naked puts. I know the logic is it's a commodity. It can't go down forever. But, Matt, when I graduated high school, oil was like $12 a barrel. So I don't know, man. I'd be cautious with the naked put side of that.
Yeah, I agree there too. The only thing, the one saving grace, I think you have a lot of information if this, if USO particularly breaks down and you see it take out that last swing low, which was a little over 16, I think. So you've got some pretty good information coming your way if you've got those 15 puts sold, and especially if you have a strategy where you're looking to take delivery of the stock and then, maybe start selling some calls against it, get some further protection underneath it, is probably the route that I would go if I ended up taking delivery of the, of the ETF until I've got a little more information. I'd probably snag some sort of put protection just a little bit below where I take delivery of that stock, just in case it does keep tanking. So
Matt doesn't like my criticism, I don't think. Either that dead silence is Wi-Fi going out in Huntington. They put a street light down there, Mike. So he's in the big time. Or else he's pouting. He's probably just pouting. I think he's mad because I cracked that joke and everybody laughed earlier. He tried to step right on it. Yeah. What's fascinating right here, Mike, as I'm listening to you talk, I remember when both of us were brand new at this, and we took a different path. I always worked from home and traded from home, and you actually went the corporate route for a little bit, but then you stepped out. And I got to tell you, just talking and listening to you, you clearly have made a lot of personal growth in the last 5 or 6 years since you moved out and started trading from home. I mean, what was the change? I mean, what have you seen having that different environment, different experience?
Yeah, well, a couple things changed. One, I was able to kind of step away from the, the ins and outs of the office where you're pulled into meetings and just suck up.
You can just, you were sick and tired of getting called into the office by me.
Not your office specifically. So Tim just asked, the difference between kind of stepping out and working from home versus being in the office scene. So what I did was I had a lot more time to, one, trade for myself, which was obviously huge. And then spending more time with aspiring traders and helping coach and mentor others. So when I wasn't doing my own trading or watching the markets for myself, I was, talking to other people about trading. And one of the things that I love about working with aspiring traders and people that are learning this or trying to get better is there's always something that we're talking about that I sometimes need to hear. It's always good to reinforce the rules or certain principles or strategies. So I think having a more steady dose of that definitely helped me along the way.
Well, I firmly agree. If you have to teach something, you're going to learn more about it than you ever than you ever would have if you just thought you had to internalize it.
Well,
spitting it back out to a group of people, I mean, it days straight, right? You're not going to go over and over leverage. And so it's one of those deals that you learn as you go, and you learn being a teacher as well. I can't agree with that any more than what you said. Matt, how's your audio? Are we losing you? Should we just dump out of Matt and have me and Mike talk?
No.
Yeah.
No.
I think we might have a better podcast.
Listen. I asked you guys what we thought of my trade when I was taking delivery on oil at 15, and then puts on crude oil because I think it's going down. And then right when you guys were answering, and I'm sure both of your answers were spot on, no sarcasm at all. My little baby girl started crying, and I don't care what I'm doing, who I'm teaching, who I'm talking to. When my little Katira starts crying, Daddy goes and sees what's going on.
Yeah, that's not going to make her a little bit dependent on Dad as she grows up.
I could care less. I will handle those. I will handle those issues when I have to handle them. For right now, you know what?
Well, you have a history.
Daddy's there. Yeah.
I mean, there's a reason for that. I don't know if you remember, Mike, but Matt's daughter. One of the reasons why he ended up going home. He talks about this all the time. His daughter started having breathing problems. I think, Matt, is it right?
Yeah. And she back after you had left for about 6 months, Mikey, and I was in a meeting one day, and I got a call from my wife who was down in Huntington visiting her relatives, and my little daughter, she was 8 months old at the time. She asphyxiated on some cereal, some like cooked cereal. And she was out for a good 2.5, 3 minutes. And my wife gave her CPR and shoved this. I mean, everybody thought she was dead. It happened in front of my other kids too. It was just a nightmare situation. And since that time, she had some, we didn't know it at the time, but ultimately she had some behavioral issues where every time she got hurt, she would, hold her breath and pass out and, relive the entire experience again. And so, I'm a little paranoid about it. So every time she starts crying, I'm like, okay, I rush like a bear down the hall. What's going on? And fortunately, there was absolutely nothing. She was yelling at Moo for some random reason. Who knows? Which is now 99% of the case. So.
All right. Well, that's why I jumped off. And I know how that feels. My 6-year-old, not to turn this into a parenting podcast, but he had something similar. He would have, I think they called them breath holding spells, where if he got really agitated or mad about something, he'd just pretty much pass himself out from crying hard. And man, the first couple times that happened, it was, oh my, yeah, you can't even describe it in words.
Scary as hell, isn't it? Would he do it till the point where he would seize up too?
Yeah. I mean, it was a full on,
not
going
to
quite
seizures,
like a seizure, but just like you just on the verge of almost having a seizure. Yeah, and
I think my older brother still does that.
So I remember the worst was we were in.
Is he going to listen to this? Yeah, if he listens to this, he will never forgive you for that.
It's just a joke.
That's good stuff.
He doesn't take jokes very well. You know that.
I don't think he has a choice growing up around you two.
Oh, I should have said it.
Phil, we might need to drop out of that later. We might need to cut that one out.
Tim, he is not going to talk to you for a good 8 months. 8 months. That's my over/under. Anyways. So is your boy still having them?
No, he grew out of them. I think by about 4 years old is when they started getting to where they could control it themselves and knock it off. So, but it was some scary stuff. So I know what you mean.
Yeah. So,
and I think there's a tie-in here actually, and I think it's a really important one because we have so many students and so many people that we work with that don't get the opportunity to be with their kids and around their kids, not only when they're having, some kind of issue like you guys are talking about, but even just to watch them play a ball game or something. Having that freedom is something that many people, they don't get to grab onto. And Mike, you bring people in, and you teach them to trade from the very beginning stages. That vision, how do you foster that without making it seem like it's going to happen instantly, because it's not, but also keeping them motivated throughout the entire process?
By far, I would say that's probably the biggest challenge that we face as mentors and coaches is, people get so excited. They see the potential of options. some of the just jaw-dropping returns, or just trading in general, whether it's futures or foreign currency or whatever, they see these potential returns compared to the normal world, hey, 7 or 10% return for the year type stuff. They see what's potentially there and they get really excited. They start planning retirement early. They start thinking about the second home they want to buy, or the new boat they're going to upgrade to, or all these different things. And it does take, I think just a lot of reassurance and kind of pounding the idea into their head that, hey, this isn't just going to happen overnight. It takes a lot of times several years to really get to where you're proficient with this. And that kind of brings in one of the other challenges that I've faced as I've been working with people is they dive in and they start, working down this path of becoming a trader. And before they spend enough time on one particular strategy or system, they feel like, oh no, maybe this isn't working for me. Let me try this now. And they head down that path of kind of becoming a jack of all trades, master of none, which is just kind of the worst case scenario for a trader.
Hey, Mikey,
it's got to be hard.
Oh, absolutely. It's got to be hard. It is.
Because you hear the coaches talk about it, you hear mentors talk about all the stuff they're doing, and if you're new, you're like, oh, that sounds cool.
But here's the difference, though. We've been trading for 10 years, and we didn't start just trading everything. It's a process, and I want to get Mike's take on this, how he handles somebody who, he doesn't feel is ready to move on to another system, another strategy, another technique. How do you bring them back down? And the reason I ask is I've been dealing with this student who I've been working with for a few months now, and she's doing great. She's making money on credit spreads, covered calls. She's doing naked puts. But I still don't feel like it's time to start talking, Vega and earnings-based strategies. And she was like, hey, Matt, when are we going to do this? When are we going to do this? When are we going to do this? And I basically just said, when I feel you're ready, and I don't know if she liked that answer, but that was the answer she was going to give for me. How do you go about handling a client of yours that wants to start getting into some more advanced techniques, but you don't necessarily feel is ready for that?
Yeah, good question. I mean, a couple of things it kind of depends on their personality, but a couple of things that I'll do is just kind of surprise them and say, all right, if you're feeling comfortable and ready to move on, let's just talk about a couple things real quick, and I'll spring a little pop quiz on them. I'll say, all right, well, if this happens in this strategy, what do you do? How do you adjust? What do you do? And a lot of times they find themselves doing the and they don't have any real answer. I said, okay, so we need to talk about that and make sure you have that down 100% before we put another iron in the fire. And sometimes our jobs as mentors is to teach them things, but also to help them realize what they don't know yet. Because like the old saying goes, they don't know what they don't know. And sometimes they start making this progress and they start learning, the client starts learning a lot of things, and they see where they were 2 months ago and where they're at now and how far they've come. And it's exciting. I mean, they're pumped up, their account's growing a little bit, and they're ready to just, set the world on fire. And sometimes you need to rein them back in a little bit and say, hey, great progress. We're doing really well. But there's a whole nother side of this particular strategy, for example, that we haven't even talked about yet. How do we adjust if this happens? What do we do if this happens? And bring them back down to, the flip side of that strategy, not just this is how we set it up. This is how we position size. This is what you want to have happen. But now what do we do if this, or this happens? How do we repair the trade? How do we, what's our exit strategy and, A, B, and C when some of those things happen. So that's what I've found to, be effective, but it's still a challenge because people get the excitement, the energy, and they just, they become addicted to the learning a little bit. I know that's how I was when I got started. You start soaking it up and you just want more and more and more.
Well, and I also think they see us.
I also think Matt, I want to say this real quick, and I love being able to step over Matt. Hold on, I just realized that this is a great world I live in. When I can interrupt Matt,
you better have something very important to say. I will just say that
I do have something very, very important. Now I'm looking for a joke, but I'm not going to do it. Here's a great tip for both of you. Okay. At the end of every mentorship, one thing I do with my students is I will take them back into a back testing scenario, into one of the most complicated situations I remember in markets. Like think the debt crisis in Washington when the markets dropped like 10% in 2 weeks. And we'll build credit spreads and I'll show them how black swan situations can happen. Because one of the things that I've found as a trader is that it's not if, it's when. You're always going to run into a market condition that's really complicated. And if you don't at least understand it or aware of it or know how to hedge it or how to just get the heck out and limit a drawdown, you're going to be in a tough spot at some point. One of my best students, and Matt, we have him on the podcast. We have him in the show. We're going to do some stuff with him, Steve Wong. He made our Hall of Fame, Mike, and he has a great trading record. And Steve came back for his second mentorship after he watched a market crash really take all of his profits one year. And the second mentorship, what we did is we talked about hedging, delta weighting, beta weighting the account, things like that. And it's layers, it's steps that you have to build into, but preparing for those drawdowns,
Absolutely.
I mean, it's part of trading, no matter what.
Yeah, and it never ends. I mean, I was reading, it's probably been about 3 weeks ago. This guy, he set out, he'd been the head of risk. I think it was Morgan Stanley. He sets out, he did his time on Wall Street. He's going to start his hedge fund now. I think it was something called like the Canarsie hedge fund. It was some weird name. But this guy, it wasn't a huge fund. He raised about 60 million and launched the fund. This was just recently. This was January, guys. Not even 3 weeks later, like 21 days go by. This was the head of risk for Morgan Stanley. That $60 million fund, 21 days later, was worth $200,000.
What?
He'd found a way to lose 59.8 million of the 60 million in 21 days. This is a guy that spent his life on Wall Street, connected, rubbing shoulders with the uppity ups and the big boys that are buying the $50 million, apartments on, Central Park. So that story to me, I thought, wow, if it can happen to this guy, you just always got to stay on your toes, no matter who you are. I mean, especially if you're just getting into this, you're a couple years in or a couple months into your trading. That should, you don't want to have your life driven by just a fear of a correction or something like that. But at the same time, you always want to be prepared for it. And that story, just reading that in the Wall Street Journal a couple weeks ago, just really rang home for me.
Hold on. Let's talk about this for a second, because that is
I got to look up the news story, Matt. What's his name? I want to look up some of these details.
Let me find it. It's the Canarsie Hedge Fund, Canarsie.
All right. The month
Canarsie
of January saw the market go down, 3%? I mean, if that, maybe? About 3%, maybe?
Oh, it's in the Journal. It's 22nd of January. It was right in the Wall Street Journal. I'm reading the headline right now. This is unbelievable.
Hold on.
This is unbelievable. And instantly, when you started talking, it made me think of that old Sheldon Nattenberg story.
Number one,
go ahead.
We can't just move on from this, guys. Okay. This is a Morgan Stanley risk-averse type individual, starts a hedge fund and blows up an account in a month where the market clips 2-3%. All right. Okay. That do you know?
Yeah. And I think his letter to all the investors was something along the lines of, I acted overzealously. He was trying to describe what happened.
Let me go by. What do you have to trade to blow up an account with a 3% drawdown in the market? I mean, what?
Isn't that wild?
I think you have to trade ego for a pound of cocaine.
He just
cocaine drops in one podcast, guys.
Okay, well, hold on.
I think you got to be an addict or something. And I've never done drugs. So
Hold on.
And anyway,
you must have just watched that Wall Street movie or something.
Is this a guy who hears about futures for the first time in his life and over leverages his entire account on short-term options and is wrong on it? I mean, I don't know how you do that.
Well, I got a story right here. You want me to read you a couple of clips, Matt? Okay, so this guy's name was Kenneth Durrett, and along with Owen Lee, a 28-year-old former Galleon fund manager trader, they headed up the hedge fund. It was $60 million in capital. It dropped down to $200,000. Kind of scanning some of the stuff up. Who named the fund after the Brooklyn, New York neighborhood where they grew up. So he's a Brooklyn kid. This is like a Wolf of Wall Street story.
He's not wealthy in his neighborhood anymore, especially from Brooklyn. Well, over there.
Yeah, the fund managed $60 million, not including borrowing at the start of the year. The person said, and it needed to move assets to the clearing firm. Holy cow.
Yeah,
He
he's
was up
probably not renewing
50%.
his season tickets to the
Look at
Brooklyn
this.
Nets next year.
He was up
Hey,
50% in
Tim,
2013.
I got a question for you.
Okay, so it wasn't.
Do you think
a
the
brand new
Mets
fund.
owner invested in the fund?
He usually gets involved in some
they're
pretty
terribly
bad
ran.
investments.
I mean, now we know why the Mets have been so bad for so many years now.
Hey, I don't care where he puts his money, except for I want to know
he
who
can't
he's
sign-
signing to a contract.
Because he
We haven't
can't
signed
sign
anybody
to
big in a long
contracts
time.
because he gets involved in these types of hedge funds. He's that smart.
He traded options, Matt, pegged
course
to
he did.
indexes. He spent all of his money on options, and he later wrote in the letter, "I acted overzealously."
$60 million in short-term options. Oh my God!
Hey, go big or go home,
Good.
right? I mean, good for that guy.
Yeah, he
rolled it up
said,
and went
you know what?
for
Either
it.
we're hitting it
Well,
or we're moving anyways, one way or the other. Oh my God!
That's right.
It makes me think of a couple of things. Number one is when you trade other people's money for the first time, coming from a corporate situation, he clearly didn't have the right mindset. I think that's pretty obvious.
Not at all.
This was not just him getting unlucky. He lost his mind. You've got to have curbs. I mean, how does a hedge fund not have accounting curbs and risk control?
I don't know, because
killed me more
typically
than
those
anything.
risk curves kick you out of trades. I mean, they won't let you risk anymore. You can only risk so much per movement in the market. I don't understand it. It just seems to me like the traditionalist bankers, you know what, good for them. Traditionalist bankers come into our world and get their ass kicked. I think that's a good thing.
Oh, I don't know. There's obviously a lot more to the story. I've got a lot more questions and answers, but I can't even understand. It's a good example of a couple of things. Number one, the so-called expert on Wall Street, they're no better than anybody.
They don't know how to trade, period.
They don't really trade. Yeah. And so you put them in a trading environment, they may not be ready for it. This guy
Who is the idiot who gave him $60 million?
Oh, dude, you got a Morgan Stanley background. Hey, Matt, listen, I'm the ex vice president of risk control for Morgan Stanley, starting a hedge fund. Why don't you bring some of your money over? We're going to trade options on the S&P 2 days out, and we're going to put the entire fund on it and hope that it goes up.
Sign me up right now. That sounds like a win-win. God, consumers are idiots.
Isn't that so bad? But I drew some parallels too. I mean, one of the things that I see, again, as one of the major roadblocks for the people that I work with is they don't really set out with a plan. They don't have put together a trading plan. What strategies am I going to focus on? What's the position sizing per strategy? How many trades do I want to have put together for that particular strategy? And I've seen people take on way too much risk. And that's, again, this guy, it seemed like he got caught up in that same mess. And I've seen this emotional response too. They have a losing trade. They want to make it back. Maybe they get hit again with a second losing trade. Now they feel like they're in a bigger hole, and you get one of those personalities that doesn't like to lose, and guess what they're doing on that third trade? They're increasing the position size. They're trying to make more back quicker.
I agree
and
with
it
you,
just kind of
Mike. I agree
snowballs
with
from
you
there.
100%
I've seen it before.
on that. The emotional aspect, they lose one trade, two trade, three trades, and the instinct is to, let me double up, because back 20 years ago, they told me if I doubled up in blackjack, I would always win. We know that's not the truth, but that's the mindset, when the reality is you should scale down your position size. You shouldn't double up, you should scale down, because the equity curve doesn't work if you scale up. And how does a Morgan Stanley trader over risk doesn't understand equity curves? And I just don't get it. It's really kind of sad that everything that I'm kind of hearing here, it is sad that our financial system, is predicated on consumers dealing with people that really don't understand trading. They're all tied to the same model, and they don't understand investing or trading.
We're missing a big lesson here, though, guys. And I want you to think about this. When you start a business, you need to bring people in that you trust that will slap you around if you start acting like an asshole. This guy was risking all of this money, and he has nobody in his life to tell him he's out of his mind. And you have to wonder, we've all been through times, stresses, emotions, whatever, going through a divorce or whatever. And there are people who lose their mind. You got to put people around you. Matt, honestly, this is why you're on my power team and my trading partner. Because I know that you'll be able to see me and say, Tim, what are you doing if I went crazy, right?
Yeah.
This guy lost $60 million because he had nobody to tell him that he shouldn't risk it. That's crazy.
I don't get it personally. I just don't. I don't understand how you could possibly lose $60 million when the market is going sideways. I don't get that. I'm not even going to try to understand.
It's pretty wild. But Tim, I totally agree with you as well. I actually vividly remember one trade where I was stuck in some emotional turmoil like that. I'd lost a little bit, doubled down. And it was when I was sitting in the office, and I remember, Matt, you walked up, you looked over my shoulder, and you said, "Hey, let's go grab some lunch." And I said, "I can't, man. I'm in the middle of this trade." And you know, of course, my emotional blinders were on. And you said, "Look, are you long? Are you short? What do you got going on?" I told you my trade, and you said, "It broke down past some support there. Just close the dang thing. Let's go get some food." And I thought, the one, I know Matt's got the charm. He can be pretty convincing when he turns it on. But then finally I looked at the screen and kind of pushed back a little bit and said, "Oh, he's absolutely right. I was so close to the problem and so emotionally attached that I wasn't able to just pull the plug." And then I said, "All right, let's do it." And we went and grabbed some grub. So having that person helping you out is a huge asset.
Just kind of go on the horror stories here for a second. Back in 2011, when the European debt crisis hit, I was nailing it, Mikey. I mean, every time the market hit support, I would basically go long market, short gold. And every time the market hit resistance, I would go, short market, long gold. And for about a month and a half, I was doing great. I mean, every time it was just nailing it. And I got emotionally involved in it. And I was just like, "Oh my goodness, this is awesome." And one day, the market broke out of resistance. And I was just so sure my system that I'd been doing for the last month and a half was going to continue to pay off. And so I kept doing it. And Tim would talk about, what we're doing every day. And Tim would be like, after 1 or 2 or 3 or 4 or 5 days, finally, Tim just says, "Matt, listen," because it was obviously not working out for me. And he says, "Matt, what would you tell anybody that was doing what you were doing right now?" And I'd say, "You're an idiot. Get out of the market." And right then, because you know me, I'm fairly blunt, in a kind, loving way, obviously. So I closed all the positions, took a week off of trading, and got all the emotion out of it. Went back to trading, and I was back at it. And it reminds me of one simple reality that I've always kind of felt in my trading life is once I've closed the trade, I never really think about the trade again. I just go on to the next trade, and if you can just do that, once it breaks your parameters, just get out of the market, go out and go find another trade.
Yep, I agree. It sounds cliche, but I tell all my clients that I'm working with, I said, it's very simple. You don't overcomplicate it. You plan out your trade and then just trade your plan. And I just had a phone call with a gentleman just probably a week and a half ago. He laid out this position. He sold some puts. He was ready to take delivery of the stock and was going to, start selling some calls against the stock. And sure enough, the stock, trades a little bit lower. And he calls me up and he says, "Mike, it's moved down below the strike price. So I'm going to get assigned these shares, but I was thinking, what if I buy these puts back and then sell some more? Or what if I did this, or this?" And he started brainstorming around every other possibility besides what he set out to do in the first place.
When he first got on the trade, he was planning on taking assignment, right?
Exactly. He said, "I like this company. I would love to own it. Should I just buy some shares?" And I said, "Well, here's how I like to do that. Instead of just coming in and plopping down the cash to buy the stock, if you're planning on buying 500 shares, just sell 5 puts, maybe a strike out of the money. And if the thing pulls back, you get to keep the premium and you buy the stock at a little discount instead of just forking over the cash right here, right now to buy the stock." He said, "Oh, I love that idea. That's brilliant. Let's do it." So he sells some puts. And then it wasn't more than a week later, he's totally backtracking on the plan that we'd put together. And so in the nicest language I could, I tried to explain to him that he was being a little bit of a bozo and to follow through on the plan that we put together.
As the stock was going down, he started seeing a loss on the puts and was like, "Oh, well, but what if I just buy them back and sell some deeper? I can make up for that loss. And, you start overthinking it. And it's just like, no, the reason you sold the puts in the first place because you wanted to buy the stock. So just buy the stock. Exactly.
Yeah. I said, remember, you wanted to buy this thing a few months ago, right?
And you should have said, well, what happens to the premium if you get exercised? Well,
that's right.
You got to keep it anyways. Come on.
Hey, Mikey, you want to hear my broadcast voice?
Yeah, let's hear it.
Let's show you how many podcasts we've done. I'll give you a good drop right here. You guys have been listening to the Trading Justice podcast with Matt and Tim here at Trading Justice. We're here to bring you financial education, and we're providing this through tackletrading.com. Get in the game. We're talking to Mike Curtis, 12 years of trading experience, all the products, lots of students. Mike, how'd you think of that, bud?
That was great, man. I just couldn't stop listening. You're hitting those tones just beautifully.
5
out of 10, Matt.
5. That was not even close to.
That wasn't my best.
Oh wow! Mike's gonna just say nice things because Mike's just a nice guy.
Yeah, I'm trying to butter you up so you bet on the golf course next time. That's what
I figured it out.
I do have a question for you, and this is actually for both of you guys. We've had a lot of experience working with people. And Matt and I were talking about this the other day. We've had students from all over the world. Sometimes English is the second language. Sometimes they come from wealth. Sometimes they come from poverty. All different ages, all different ethnicities, backgrounds. And so as a teacher, you get many, many different learning styles. In your experience, Mike, how long does it take for you to connect with someone so that you can really understand them and teach them in their own unique way?
Yeah, good question. I mean, that's one thing that I love about doing what I do is, even though a lot of times we're teaching some of the same concepts, some of the same principles, the same strategies, and having worked with I think it's well over 700 people now, it doesn't ever get old because everyone learns differently. So anytime I sit down with somebody and we're sitting side by side, or we're on a training session via like a webinar, everyone learns differently. And so I think it's just maybe a skill that you kind of develop over time, but you develop almost a sixth sense of getting a feel for if they're really understanding it or if they're just saying, okay, yeah, okay. You start to really get a feel for when that light comes on, and you can sense it through their expression or through their replies and and I've worked with all over the world as well, and the language barrier, even that doesn't seem to slow things down if you've been at this for a while. And it's just kind of figuring out how they learn, where they're starting at is the key, of course, how far along they are with their education and their understanding of the financial markets in general. And then just taking them from there and helping set clear goals. And just like any relationship, it's just about being a communicator. I don't just get on a discussion and start pounding information into their head for an hour straight or anything like that, or for 2 days straight. And that's one thing I learned from you, Tim, was we had a discussion years ago, and you said, the point isn't to sit and talk to them for 8 hours straight. You've got to engage them. They've got to be working on assignments. They've got to be thinking on their own and trying to put things together. And then you can really gauge how they're doing and how they're progressing. And after you made that comment to me, I just kind of clung to that. And I said, wow, that makes a whole lot of sense. And I need to really implement that in all of my teaching as well, just to, not sit there and just vomit information all over them for an hour straight, but, really communicate with them, see what they're understanding, what they're grasping, spring some quizzes on them where you're testing their knowledge and their understanding, have them think through a scenario, or how to build a trade or set up a position. And then you can really get a feel for how they're coming along.
Yeah. And I famously, Mike, I actually make my students get up and get out of the office as well. Yeah. Because I think one of the big things is if you're sitting and staring at a computer screen for an entire day, you're going to lose some of your comprehension, your retention.
You're going to lose your mind.
You got to get up and move your legs. Yeah.
Right.
Matt, what about you? What do you think?
About what?
Well, I mean, just the general idea of, experiencing all of these different types of people that you've trained and taught, and how you connect with them. Listening to Mikey there just makes me journey of being a teacher.
It is an absolutely different skill set between trading the markets and teaching somebody how to trade the markets. You can take some of the finest traders out there in the world, and they wouldn't know how to explain something to somebody in simple terminology. And what a trader and a successful educator does is they have to have the ability to break down complicated concepts into actionable, simple items. And what I have found over the years in doing things is I try to, take some of the language out of it initially. So, Tim, you know how I teach technical analysis now. I teach a 1-2-3 pattern, right? And basically how I got that was because one day I was sitting in a class somewhere in some city in some city in the US, and basically I'm teaching, pattern recognition, trend analysis, all of this, complicated stuff. And absolutely nobody was getting it. Nobody was getting it. And basically I said, okay, when it breaks this, here is 1. Then it goes to 2. Then it goes to 3. And then I had the students just so I said, okay, 1 we do what? They'd say buy. 2 we do what? They'd say sell. 3 we do what? They'd say buy. And basically what I was teaching them was Elliott wave theory and Fibonacci. I just didn't say it like that. And now, people now start to understand it a lot more. And then eventually I'll get into this when they're down the road a little bit. I'll say, okay, now the proper terminology is this, this, and this. And so it's just a way of taking difficult concepts, breaking down to simple terminology, and also understanding your student, getting to know who your student is. Some people learn in one capacity, others learn in another capacity. Some people, some people like more in terms of just action items. Give me step by step by step. Some people like the more of the theory of it. And so you got to get to know your students as well. But at the end of the day, as an educator doing this for 10 years, we know how to successfully teach people how to trade. And you have to stay true to who you are as a trader and an educator. You have to force your students to get on the process, because there's one way to do things, and that's the right way in the financial market.
Well, and I even listening to both of you,
I'd agree. Well said.
Makes me think of a conversation I've had with my wife where she's pointed out to me that, Tim, since you've become a teacher for so long and an educator and a mentor, you actually communicate different with everybody in your life. Like I find that I make things very literal. I'm very clear about what I want and what I don't want. So like when somebody asks me a vague question, I kind of make them restate it. It bugs the hell out of my wife. Those conversations don't go well. But you get these questions from students. And you're like, well, okay, what do we and you almost have to cut down to the chase, right? What are we really trying to learn here and understand? And let's focus on that. Because sometimes when somebody's curious and they're getting all this information, they might be overwhelmed and their brain just might be spewing out every thought they have. And so teaching and mentoring Matt and Mike, I mean, it's been an amazing journey. And I think honestly, I know the two of you guys are the best in the business. And that's just because you've worked with students from day one. Now, Matt, I think we got to wrap this one soon, bud.
Well, I just want to say thank you for really touching the vanity of it all. Right. Appreciate that.
Vanity? I was giving you a compliment. I wouldn't even compliment myself.
My vanity. My vanity. That's what I meant. My vanity, not yours.
I was going to actually pay you a compliment.
Nobody cares about what you...
I think you've broken down your ego being a teacher. You're much more patient. And Mikey, you remember Matt when he was 28 years old, and he a little bit more fast-paced and a little bit more arrogant, I think would be easy to say.
I was not arrogant. Oh. Arrogance is thinking you're better than other people. I was not arrogant. God, you're an asshole.
I love it. I love it.
Well, I was trying. See, I can't even give him a compliment. He's stepping on it the whole time.
And okay. That's like giving a compliment, like Ricky Bobby saying, "With all due respect."
Yeah, that's right.
Yeah, I mean, seriously. Yeah, Matt, when you were 28, you were a colossal asshole, but now you're just less than an asshole. Yeah, thanks for the compliment, Tim. Thumbs up, buddy. My goodness. Oh.
First of all, I stand by it. I think it's accurate. So
there's no disagreement from my corner either on that discussion.
I got no comment.
On that note,
I love everybody. That's all I'm gonna say.
I don't love
turned
everybody.
out okay,
I love
Matt.
most
You've turned
people.
out okay.
I don't
So,
love
Mikey,
bankers.
what's your plans? Are you gonna work as a mentor for this company for the foreseeable future? Do you work for them as a contractor? Do you own the company?
I do, yeah. So I work for them as a contractor. I was kind of getting sucked into where I was running most of their operations, and it took me away from mentoring and away from working from home. And so just recently, as of just a few months ago, we kind of rearranged my my agreement with them, and I'm doing less of the management admin type stuff to just being able to teach a little bit more and stay from home. I'm only heading into the office for a couple hours a week now, and just enjoying being at home and doing more teaching. So just felt like it was a good time to free up the schedule a little bit and spend a little more time at home with the kiddos and everything else that's going on. So
Awesome. Oh, this has been a fantastic conversation.
this was great. That was a lot of fun, guys.
Yeah. When we going
We have
golfing?
fun on the podcast. Yeah, we do.
That's right. We'll have to do this again soon.
Oh, we will.
Golf,
We will.
Well, it was 60 degrees the other day, Matt. I think we could probably get golf in the next month for sure.
Oh yeah.
Next month, tomorrow.
Dina Dean's not leaving till Thursday. I could golf on Friday.
There you
Dina
go.
can
Get your
golf.
taxes out of the way, Matt, and then we'll talk
That's
golf.
true. All right. Next couple weeks.
Bring you back down.
Next couple. Yeah, I'm staring at the colossal pile of junk right now.
See,
Well,
6
Mike-
years later, I'm still keeping tabs on you, buddy. That's what
Hey,
that's
listen.
what I got to
that-
do.
Hey,
that's
dude,
what-
you
that's-
should
that's
go,
what friends do, brother.
Get a registration at Tackle Trading. We'll get you involved with the clubhouse and stuff, and you can kind of see what we're doing over there. It's pretty exciting.
Sounds good, guys. Can't wait.
All right. Thanks, Mikey.
All right, guys. Have a great one. Great to catch up and chat a little bit, and we'll talk to you soon.
All right, let's send it out here, Tim. Yeah, you've been listening to the Trading Justice Podcast presented by Tackle Trading. Get out there to Tackle Trading, change your life, make some money, and go out there and change other people's lives as well. Take control of your future by getting in the game, and that's
Yeah,
how
that
you
was
do
a
it,
lot
Rob,
better
Tim.
than mine. It was. That was a 7. Mine was a 5. That
Five
was
and a
a
half.
5.5.
No. That was at least a 6.5.
You've been listening to the Trading Justice Podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice Podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.